Good morning. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and joining me is Tony Zhang. He is the head of product strategy at OptionsPlay. But today we're going to take a break from talking about options for trade talks, and we're going to dive into the world of cryptocurrency. Tony, as always, thank you for joining me at MarketSite. And I need you to break this down to me like I'm a 5-year-old, because it's just everyone I talk to is like, do you get this? It's such a hard concept to grasp. So my first question is, what exactly is cryptocurrency?
So the discussion around cryptocurrency can get very technical, so I'm going to try to keep this as high level as possible. But a cryptocurrency essentially is a digital currency, and it's built on the blockchain technology, which means that it's decentralized, transparent, and difficult to manipulate or hack. And to understand it, we have to first better understand blockchain. And what it is, it's a decentralized database of all transactions that's publicly available. And what it can do is it's publicly available, and what that does is it allows anyone to be able to see the transactions publicly. Mm-hmm. And the best way to understand this is to think about it's the exact opposite of what we currently have, actually. So if you wanted to transfer money from your account to my account currently through a bank or through PayPal, you have a centralized database of all the transactions that's privately held. And the problem with that is that that's vulnerable to attack and hacking. So a blockchain technology, what it does is it allows the database of all transactions to be publicly available, so that if anyone wanted to hack that, instead of hacking a single source, they would have to hack thousands of sources at the same time, making it less susceptible to manipulation or hacking. The other thing about cryptocurrency is that our current currency is created and controlled by a single government entity, our central bank. The cryptocurrencies instead is controlled by the participants, which means that no single entity can control the creation or the supply of it. So what this does is it creates a digital currency that's that's faster, cheaper, and more reliable to transfer between two participants, and it allows it to be completely anonymous. So it acts like cash, but you can do it digitally. And what this creates is it's essentially a currency that mimics real currency that we have today, except there's no single government entity that owns it and can be traded between two people without an intermediary.
So is Bitcoin the only kind that's out there?
No, so Bitcoin is just the first one that was created in 2009. Since then, we have almost 1,000 different cryptocurrencies that have been created off of that. Ethereum is probably the second most popular one. Bitcoin currently has a market cap of about $70 billion, which is about the same size as Costco or Netflix.
Right.
Versus Ethereum currently has a market cap about $27 billion, and essentially, the blockchain technology that it's all built on is open source, which means anyone can take an existing cryptocurrency, change it, and create their own version of it. And that's really why we see so many of them currently being created over the last couple of years.
So that leads me to the next question. Are there differences between the many types, and do they trade in different amounts? One is worth more than the other, almost like traditional FX is?
Absolutely. So there's two main so I talked about Bitcoin and Ethereum, right? These two are offshoots of each other. However, most of the 1,000 cryptocurrencies that are out there are actually very similar, if not identical to each other. However, there's a distinct difference between Bitcoin and Ethereum. Bitcoin was originally created simply as a payment system. Ethereum has smart contracts built into it, which is essentially a digital contract that can be enforced by the blockchain. So if you wanted to transfer assets such as your stock or your house to me, that transaction can actually happen and be enforced by the blockchain, as opposed to currently it would have to go through middlemen like brokerage houses and clearing houses. So that is the one distinct difference between Bitcoin and Ethereum. The rest of them really comes down to relatively small differences between scalability and security issues and things like that.
Let's talk about the trading of it. Mm-hmm. Is it like a stock where charts come into play, or it moves off of fundamentals or macro news?
Absolutely. So there's different things that move these cryptocurrencies. Right now, I think most of it is actually news. If you wanted to trade them, it's almost identical to FX trading, and because it was created to mimic currency. So you can trade it just like FX. There's no centralized exchange for them, so you can trade them in a lot of different places. There's algorithmic trading now, so you can trade them across multiple currencies, even cross pairs between these cryptocurrencies. And because there's algorithmic trading, there's actually relatively small arbitrage opportunities between these pairs. So, if you're trying to trade them, I generally say that the best thing to do at this point. There's not a lot of fundamentals go on. Using the charts is probably a better way to play these.
Well, if it moves off in news, what happened when the North Korea rhetoric heightened and then it dissolved for the most part over the weekend. What type of movement did Bitcoin, Ethereum follow?
Yeah, so if you think about the stability of the US dollar, because that's usually what we price them in, the concern with the US dollar is if North Korea was to nuke the US government, and if, let's say, the US government was to no longer exist, then the US dollar would essentially be worthless. And that would be a reason to convert your US dollars to Bitcoins. So that would be one reason how Bitcoin could move off of news.
Right. Okay, so are governments actually adopting this type of currency?
So it's still very early days in the cryptocurrency. So we've seen a very large variety of responses from governments, everything from outright banning cryptocurrencies to even certain countries that have allowed explicitly trading of this. So we've seen China adopt a cryptocurrency called Neo, which is an offshoot of Ethereum with smart contracts. We've seen the IRS deem Bitcoin as properties, so that if you were to trade them and gain profits, you would have to pay capital gains on them. So it's a very wide range, and it's very early days to see what's going to happen. However, the anonymity of cryptocurrency has attracted illegal activity, so tax evasion, money laundering, purchasing of illegal goods. So because of that, governments do want to have some way to either govern or control these cryptocurrencies, but fundamentally the idea is to create these currencies outside of the scope of the government. So it's very difficult to say at this early stage.
Do you think years down the line that perhaps this cryptocurrency will take over traditional forms of currency?
I would say that really depends on who you ask. So as a U.S. resident, the U.S. dollar is what we consider a relatively stable and safe place to park your assets. You would say that it's quite difficult, at least at this stage. But if you go to someone in Venezuela, where the government is very unstable and you have concerns of the government coming in and seizing your property and your assets, I think for those people, this is a real alternative, a very real alternative to what their current local currency is. So I think generally you're going to find somewhere in between where people may have some of currency that's backed by some government and some cryptocurrency, but it's still a little early to tell.
All right, I could go on all day long with questions. This is fascinating. Thank you so much, Tony, and thank you as always for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.